Hey, welcome to the channel. Today, let's talk about another Chinese EV company called Li. In Chinese, also Li Xiang. Li Auto is an extremely interesting EV company that's valued at the moment at roughly around 17.5 billion US dollars. They are producing around 25 to 30,000 cars per quarter, which is really strong. But we can see since the fourth quarter of 2021, their deliveries are declining, and that's scaring investors a little bit. All of their cars at the moment are delivered in China. They don't have an international operation at the moment, and they are all SUVs. In particular, so-called long extended range SUVs that can drive up to 1,000 to 1,300 kilometers. That is due to the fact that they have an electric motor that is driving the car, and additionally to the electric motor, they also have a fuel motor that can produce electricity for the battery in case the battery goes low. So that's a bit of a different concept than most other EV cars are going to. And I think it's very interesting because there's some innovation. It's a new approach, right? And I think that might actually work out pretty well. Their next quarter, they are forecasting to sell roughly around 27 to 29,000 cars, which is an increase of roughly around 10%, in the mid-range. And that is definitely a slowdown from what we've seen previously, right? We've seen that growth of, 63% year over year for the last quarter. And that's, coming down now to 15%. Is, I guess, a bit painful for investors. That slowdown in growth really comes at a bad time because at the moment, Li Auto is also trying to raise 2 billion US dollar to finance their international expansion. And they're trying to do that, of course, by issuing shares in America with ADRs, American Depository Receipts. And as their share prices come down, it will get increasingly expensive to, issue new shares. And of course, that comes to the pain of current shareholders that are gonna be, diluted crazily. But on a good note, they are actually making good revenues of, 8.7 billion renminbi. That represents roughly around 1.27 billion US dollars, which is fairly good. And a very good point here is that on a gross margin, they are positive. We see they're making 21.5% gross margin, which is fantastic for an EV company. And due to that, they're actually on a gross profit of 1.8 billion renminbi, which represents roughly around 280 million US dollars. At the moment, there are not many EV startups that have good financials like Li Auto. But of course, on a net basis, so talking net profit or net loss, they are of course still negative. So they're still losing roughly 641 million renminbi every single quarter. That's roughly, 100 million US dollars per quarter. The reason for that can be seen on their income statement. We see that their operating expenses are fairly high. They have research and development costs of roughly 1.5 billion US dollars and selling general and administrative costs of roughly 1.3 billion US dollars. So that comes together to 2.8 billion US dollar. And of course, that is representing roughly, 430 million US dollar. And of course, that eats away that gross profit of 280 million US dollar. And we end up here with a net loss of roughly that 100 million that we've just talked about earlier. Now, 100 million for Li Auto per quarter in loss really doesn't bother me, because looking into their balance sheet, we see that currently they have cash and cash equivalents of 5 billion US dollar. So 100 million a quarter in loss is really not much. Additionally to those 5 billion, they also got short-term deposits and short-term investments of roughly 2.4 billion. So they have a real stable cash and short-term investment portfolio that, will keep them afloat for a long time. They do have a little bit of debt. We see they got short-term borrowings of roughly 57 million US dollar, and they've got long-term borrowings of roughly 1.2 billion. So in total, less than 1.3 billion US dollars in debt compared to, 8 billion in just cash and short-term investments laying around. So Their balance sheet looks really stable. I don't see that they get into any kind of liquidity problems anytime soon. Additionally to that, their cash flow statement also looks very good. We see that they can produce a free cash flow every single quarter of roughly 67 million US dollars or 451 million renminbi. So they're free cash flow positive, they have a positive gross margin, and they've got roughly 7-8 billion in cash and short-term investments on their balance sheet. So from a financial point of view, from a business sustaining point of view, Li Auto does look really, really strong. One of the strongest of the EV companies that I've reviewed so far. Of course, there are also some problems. They're trying to raise 2 billion in equity when their share price is actually fairly down. So that's gonna hurt, of course, shareholders a little bit. But thinking long term again, if that money is being used efficiently to fuel an international expansion, that will more than pay off, I believe. So from my point of view, I'm not owning Li Auto at the moment. I do have it on my watch list. It's really, really interesting, but I haven't pulled the trigger yet. And I think for you guys also, it could be interesting to keep an eye on that company. Thanks for watching. I hope you enjoyed it. If you did, then subscribe and smash that like button. See you next time.